Well, hi there. We have made it to summer. It is officially June 1st and want to share with you the latest data here in the Austin metro area. The latest full month we have is April. I'm going to start there. We're then going to look at some of the trends that we're seeing today, right now on June 1st, and then finally wrap up with where mortgage rates are right now and how they could impact the summer. So again, this is looking at April right here. We're going to start looking at the number of home sales in the area. We are the orange line. So clearly we are seeing fewer sales than we've seen in the last 4 years. You can see every year between March and April, sometimes there's this little bump down. You get kind of a rush of buyers. Then there's a little bit of a pause with spring break, and then we'll see it go back up. I do expect this orange line will trend back up in terms of number of sales and then maybe peak out as we get May, June, or July data. That tends to be May is where we traditionally would see it peak out. That's just number of sales. Sales volume is about total price, kind of flat there. Here's our median sales price. So we kind of bottomed out in February from last year, the big drop that we had. We bottomed out around 435,000. By April, we were back up to 466. And I'll show you some data here in a second to show that that is still trending up a little bit. But median price, we're kind of on par with where we were 2 years ago. So spring of 2021, when the prices skyrocketed up, we're kind of back to about that spot. I predict this is going to go up like a bell curve, peak out in the summer, trickle back down in median price by December. Maybe this year ends up being flat. That's been my prediction since January, and we'll see how that plays out. Average sales price, again, seeing kind of the same line trend there. Total listings, this is the actual inventory in the market at any one time that is active. And so again, we have more listings on the market. Look where we were last year, which is the light blue line. This is when interest rates last year were really just first skyrocketing up. We started the year with historically low inventory last year. We were under, 1,500 homes for sale. By this time, though, you could see that blue line was really starting to rocket ship up. And then, of course, by the time we got late in the year is where we peaked out on inventory. I'm not sure we're going to hit that number because I don't expect we're going to see as many sellers in the second half of this year as we saw last year. I think a lot of those have come off the market or by now came back on the market this spring and have sold. On top of that, new builds, which was a lot of this inventory, have started to sell through that inventory and are now controlling those neighborhoods a little better. So I'm not sure we're going to get that high, but we are higher than we were at any point pre-pandemic. So it's been a while since we've had inventory up in this range. This morning, we were about 9,400 total single-family homes for sale in the metro area. And that reflects in our months of inventory. Months of inventory, the simple way to think about it is how many are active and how many sell per month. What is that ratio? So in other words, we probably have 3 to 4 months of homes compared to only for 1 month of how many close per month. So it would take 4 months, 3.5 to 4 months, if no new listings came on the market to sell through what's actively out there. So that's where we were at the end of April. Williamson County is going to see some very similar trends. Their sales price went up. If I go to median sales price in Hays County, we're going to see the same thing going up there. So all the counties are kind of performing fairly similar. So I'm going to switch over. This is right now, June 1st. I pulled this data just a minute ago. This is the number of active listings in green versus sold listings per month in blue. So if we, again, look at last year where we had a ton of listings back in September, 11,500 listings, the number of listings always tends to drop through the winter, and then it picks back up again in the spring. But you can tell it's not as aggressive as last year. Kind of ignore this last line, that's June. But if I look at March to April, it was fairly flat. In March, we had 9,300. In April, we had 9,300. In May, which we just finished, we had about 9,800. So it did go up. We are seeing a little bit of rise in inventory, but we also saw a little bit of rise in closed sales. We had 29, almost 3,000, and we may get a few more because some of those agents haven't finished filing their MLS listing to say that it's sold in May. So I expect that number might go up above 3,000. Back in April, we had 2,500 sales, and in March, we had 27,800. So we had a few more sales in May as well. That is looking at active versus sold listings. Here's the chart I find really interesting. This is the original price. So when you originally listed that house, you wanted 500,000. Maybe you did a price reduction or two. You sell the house at 470. That's the sold price. So this is the very original list price to the sold price. So if I look at that gap, obviously the original list prices are in green, the sold prices are in blue. You can see the sold prices were coming down until we got to February. The median closed price was about 430. In March, it went up to 442. In April, it went up to 460. And in May, so far, it's coming in around 470. So we've seen that median home price trickle back up. So prices, if you were talking to somebody, prices are going up a little bit in terms of sales. But here's what's happening. The list prices where people are starting in March, obviously it went up from February to March. The list price was about 530,900 and they were selling at 442. That's almost a $90,000 gap. Now, this is not the same house, but the median list to the median sale was about a $90,000 gap. When we got to April, they were listing about 528 and selling about 460. Well, now it's about a $60,000 gap. And now you've got May, the median was a 524 list price and selling around 470. Well, now it's about a $55,000 gap. So what's happening is the list prices are coming down a little bit. They're getting a little sharper while the median price is coming up. That tells me the market's a little healthier. It's tightening up, and that's what we want to see. Ignore this June line. We just started June a few hours ago. So this is not correct data. But by the time we get to the end of the June, those lines will come into balance and give us a better idea what's happening in the market. But right now, I would say we're seeing a fairly healthy, normal spring market. We're not over flooded with inventory, but it's also not a seller's market either. So we're kind of in a neutral market. If you can list that property really well, get really tight on that list price, make sure it presents well to buyers and have the right marketing strategy, some of those homes can sell really well. And a few homes are getting multiple offers. I've been involved in several multiple offer deals in just the last few weeks. Not 20 offers, we're talking 2. So multiple offers just means more than one. But they're also, the winner is probably around list price and not some exorbitant number over list price. That's the difference from what we're seeing in the pandemic. All right, let's talk about mortgage rates. So this is as of today. So it is June 1st. I sent another video out at the very beginning of the week where interest rates were actually around 7.1 on the 30-year fixed. It's down a little bit. Now it's into the high sixes again. There's a couple things that are happening. What's happening is, number one, we've had a debt ceiling debate in Washington, and that fear was driving up uncertainty if we were going to default. The bond market wanted to get higher yields, and so they were just pushing the bond prices up by wanting to buy the bonds at cheaper and cheaper values to get a better yield, and so it was driving mortgage rates up. Now we're starting to get news out of D.C. that, it's passed the House, I think, as of last night. Ideally, maybe by this weekend, they pass whatever the debt ceiling bill is, or clear the debt ceiling for 2 years and also pass the bill that they came to an agreement over on spending. If that all gets done, that debate is out of the way and that uncertainty and risk is off the table. Now, the other thing that's pushing up interest rates, which is stickier, is we're getting out really strong economic data. Jobs are still strong. We're not seeing unemployment drop as much. There are some categories of inflation that have come down, but overall the inflation picture it's still pretty sticky. Inflation is still high. And so what's happening is now there's more consideration that the Federal Reserve may raise rates another time or maybe 2 more times this year instead of pausing. And because of that, that puts more interest in having a higher yield in the bond market, and the higher bonds is what creates higher mortgage rates. So I think if we see the rates stick in the sixes, I still think we're going to have a fairly normal, healthy summer market. I think if uncertainty comes into the market and it pushes interest rates higher, mortgage rates, the 30-year fixed above 7%, I would expect we're going to see more softening in the market because it just gets expensive. It pushes a certain number of buyers out of the market that can't afford a home or don't want to afford a home because they think, oh, rates will come down in 6 months or a year, and they'll wait. And also sellers may not list their home if they look at that environment and say, I don't want to move in that environment either. That might lower some inventory. So we're kind of in a neutral market. I think that's where we stand. I'm watching the interest rates for the summer because I think that is going to tell the story, at least for June and early July. is the interest rates. I don't think our inventory is going to balloon up. I don't think, hundreds of more buyers are going to be pouring into the market. I think we're kind of where we're going to be in terms of buyers and seller demand. So then it comes down to interest rates. So keep an eye on all that. This is how we're kicking off June. If you want to keep up with this on a weekly basis, please check out our YouTube channel. You can find all these videos at Ryan Kelly Group. I'm doing a video every Monday to keep buyers and sellers and all my clients and you up to date on the Austin market. I hope this is helpful. And of course, if you know anyone buying, selling, or planning to invest in the Austin market and wants to go into this data in more detail, we'd love the opportunity to talk with them. Until then, hey, go get a pina colada, enjoy summer, and talk to you soon.